Yo, 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 what's going on, guys? What is happening? I hope you're all having a wonderful evening. And of course, I'm guessing you're all keeping an eye out on the charts on what is Bitcoin going to do next. But first, if you are new to the channel, and for all my pattern watchers, welcome to Traders Reality. My name is Tino. Let's have a conversation. So, Bitcoin. Firstly, we need to understand what's been going on with Bitcoin in order for us to exactly work out the chance of price going to one zone to the next. Because remember, guys, this game is all about probabilities. And the sooner you come to accept that, you will then understand all the aspects that are required to trade proficiently. Okay? There's so many things that you need in order to become proficient. But the one fundamental rule that everyone should keep in their minds is this game is uncertain. At a moment's notice, it can change. All we can do is look at what is happening now and look back and see what they have done. When I say they, I'm making reference to the market maker. So, as I always like to do, let's take a trip down memory lane. What has been happening for us to get to where we are right now in the chart? Well, of course, Bitcoin has been dropping for quite some time, guys, and you can see that is evident in the chart. Okay, we came from the high of 65-ish. Okay, I said 64 really weird then. Nice little boomer moment for you guys. It wouldn't be a Traders Reality stream video without one. Okay, let's start again. 64 was the point that Bitcoin hit, and then she decides to drop all the way down to 29,242. Now, of course, she fell down lower, but that is another time in history. We need to look at what they did from this point. So Bitcoin decides to make the move rise up to the level 1. Okay, so we understand that this is a cyclical move to the upside. Rise there. Then we're expecting another move to the upside. So that's exactly what happened here. And it finalized all the way in this point. This was a crazy spike in price on Binance, okay, but let's just factor in that this is the high that they came up to. They came back down, and we then anticipated another rise to the upside to form level 3. However, price came up, took out the previous high right here, but didn't really succeed in doing so. It came straight back down, which concludes that this is a whole level 2. Now, coming into the start of the week, what actually happens? Well, Sunday night, they decide to send price up. Okay, Saturday they send price up, came back down. Sunday made one last attempt at the highs, and then they brought price all the way back down. All the projection points have been taken in and around this zone. But look, pay attention. Notable volume appearing at the highs. Notable volume appearing at the highs. Pattern formation. This is when the market maker changes direction. Until he gets enough traders committed in and around this zone, he's not going to bring in notable volume. He's not going to try and encourage any retail trader to commit any funds if he doesn't think he can do so at particular points in the chart. Now, if you go back to the last stream, how we were talking about the importance of the whole numbers, well, what number do you see the notable volume candlesticks at? 42,000. It's funny, isn't it? Funny how the bulk of the candlestick taps up just slightly above the 42,000 zone. The next candle tries to spike higher, traps the retail trader to the belief that it's going to go higher, and then comes straight back down, which is why you always wait for a confirmation candle whenever you see a vector candle, because the confirmation candle is going to tell you that the market maker is favoring higher prices. Okay? Market maker then makes the retail trader believe price is pulling back, so the retail trader doesn't want to miss out on the idea of a move like this, but more importantly, a move like this. So he allows them to believe that buying the dip is the way forward. Look at where notable volume appears. It appears below the 42,000 mark in anticipation for them to break through that zone with the best feel possible to get the shorts that they desire at higher prices. Because remember, retail trader thinks it's going to go back up. He's buying the dip. Market maker facilitates that and moves price back up, because the guys who may have missed out on the dip or waited for the dip to establish itself, price comes back up, okay? And then the market maker steps in, spikes the high, wait for the confirmation candle, didn't appear, they drop price all the way from that zone, okay? So these are the projection points that we hit. We hit this point, recovery of the vector candle. We came and hit this point, recovery of the vector candle. And they even came all the way back down to this point, recovery of this vector candle. And if you look, they came back down to this point, which sits in and around this zone of vector candles right here. Now, what can we expect next? Well, look, we've broken the 200 EMA on the 1 hour time frame, which is the 50 EMA on the 4 hour time frame. So the next point of interest in the chart sits at the 800 EMA. Now, if we're going to be sitting through a cyclical move on the principle of the cycles that we understand, rise level 1, rise level 2, rise level 3, peak formation, we are then going to expect the same thing. Now, one or two things can happen, ladies and gentlemen. Price can either come back towards the 50 EMA, reject it, and move further down. They can either bring price all the way back down towards the 800 EMA, which is the next projection zone, on the principle that they will recover these vector candles right here. And if they do bring price back into this point, that may take us into Wednesday, where they may form this W formation. Now, I've drawn out this pattern here just to keep myself reminded of what cycles I'm expecting for price to go through. Doesn't necessarily mean that price is going to rise up to here, come back down to here, up to here, and then form a W formation. Now, if it does do that, happy days, but I have to be realistic. Look at where the pools of liquidity are sitting, okay? There's the big daddy right there, which sits at the 800 EMA on the hourly, which is the 200 EMA on the 4 hour time frame. It's a very big point in the chart, okay? Really important that we understand that. Now, the key thing is this, right? Bitcoin is moving down, all right? There is potentially new pools of liquidity that they may be starting to form, where price may come back towards at a later point. But we need to see a cyclical move. Is this the move that's going to send price down and form a weak cycle? Okay? Now, for anybody new in the channel, in order to help you understand what a weekly cycle is, I will show you right now. A weekly cycle starts off with a W formation. Rise up, retrace, rise up, retrace, rise up, M formation, drop, retrace, drop, retrace, drop, retrace into a W formation. This will be your weekly pattern, okay? Now, the weekly pattern is established by Monday. So, rise level 1, rise level 2, rise level 3, peak formation. Usually this happens at the start or the midpoint of the week, which then takes us into day 4, day 5. Now remember, this is a cyclical pattern that appears in Forex. We've taken the concepts of Forex into cryptocurrency, okay? But this is a good framework to go by, because W formation usually would form on a Sunday. Monday would be level 1, Tuesday would be level 2, Wednesday would be level 3 midweek reversal. Drop level 1 would be day 4. Drop level 2 will be day 5. And then the final drop would be the formation of a new pattern on a Sunday. But cryptocurrency obviously operates 24/7 every single day. And usually the start of a new trading week happens on a Saturday, okay, or Sunday night, depending on the broker. But the cycle itself does work. The principle behind it is valid. Just look at where we are right now in the chart. Okay? Makes sense. Let's have a look at Ethereum. Where are you at, Ethereum? There we go. Now, probably all of Ethereum's rise in price could be with this new Ethereum 2 upgrade. Also, you got a big endorsement by Gary Vaynerchuk spending $3.6 million on CryptoPunks. Okay, I don't know too much about it, but it does look like it's a bit of a news-orientated move. There's support, all right? Hasn't broken no 50 EMA, okay? Are we going back to the previous fractional disparity from before, when Ethereum holds, Bitcoin and XRP move? Yeah? If you remember in the previous streams how we used to see Ethereum continuously rising to the upside and Bitcoin and XRP wouldn't go anywhere, when Ethereum would consolidate, Bitcoin and XRP would make a move. Is this where we are? Because we will only know Ethereum's intention if they do break down below the 50 EMA, and it doesn't even look like it wants to do that. All right? It looks like all the action is on Bitcoin. Now, Ethereum does have has two previous pools of liquidity that are of interest for us. All right? We've got these two zones right here. But because of Ethereum's progressive move to the upside, okay, the chances of them bringing price back down here and coming back up are favorable. Because it looks like it's going to be a controlled move. But the fact is they haven't brought price back down below to recover really much of the vector candles. It looks like they're not finished. Now, if we're going to base Ethereum's move in terms of cycles, well, one would assume that we are at right now a head and shoulders formation. Okay? Which we understand to be a variation of an M formation. Okay? All we now need is price to break down below the 50 EMA, come back up and retest it and break down further and take out pool liquidity 1 and 2. That's what we need to see. One helpful thing that you can do is you can pull up a liquidity chart. Now, this is on MT4. I like to do this. I like to pull up all the pools of liquidity that are visible to me. All right, so that I've got traction into understanding what are the chances of the market makers actually bringing price back down to these zones if they're looking to make a bit of money on their positions that they previously built. Now remember, there is no such thing as favorable directions or the market maker wants to see price continuously move higher. He has no bias to direction. All right. Traders probably believe, yes, Bitcoin is rising and rising. Oh, I hope it gets to 60, 70K. Oh, you know what? Happy days if it does. But the market maker is probably going to throw everyone about in swings and roundabouts before it even gets to that point. And you have to be okay with that. You have to be cool with the idea that at a moment's notice, any direction can take its fold. Yeah? So looking at this chart right now, it's safe to say that there are pools of liquidity that Bitcoin may look to recover. Now, when you look left of the chart, you can see that every pool of liquidity that has been drawn here has been taken out. It's funny, isn't it? Notice how all the vector candles that appear, the stronger ones, take out more pools of liquidity at once. Look, just these couple of sessions right here, look at the pools of liquidity they recovered from. Then everything came up to the last pool of liquidity over here, from that pool right there, and everything pulls back. Every time price hits a liquidity pool, it always pulls back. Look, it came through this point here, came through this point right there, then it came through there, spiked up, pulled sharply straight back. Came up one more time, hit this pool of liquidity, came straight back from there, came up to this pool of liquidity, came straight back, went all the way up to this one, pulled straight back. Now what we're expecting is price to come down to these pools of liquidity, pull straight back, same again, straight back, same again, straight back until they form the first pattern, or should I say the first peak formation to start another move to the upside. Now, here's something for you. Let's look at the bigger time frame. Now, this should really spark a bit of interest for you. This is the 4-hour W formation. No, it's not. This is the bigger pattern of the monthly time frame. This is the monthly pattern. Crazy, isn't it? It's funny how it just looks like it wants to complete it. Which then tells me, is Bitcoin likely to come back up to these zones and recover? Granted, it's going to be pulling back as it rises, guys. We understand that. You thought this move to the upside was just a straight move to the upside? No, you saw the retraces, up and down, spike down, back up, spike down, back up. But this is a big monthly cycle, or should I say monthly tattoo pattern is what we like to call it. Very interesting concept right now. Is it possible that we are in a big pattern like this? Well, all we have is to go by what they do every single day. All right? Until Bitcoin breaks down this previous zone right here, which is the 29,000 mark, there's no reason to believe that Bitcoin's going to go down any further. The maximum I'm expecting Bitcoin to go back down to, if it does bring price back down to these points, is in this area right here, which you can see, the 32,000 mark. Now, there's probably speculation across the board that Bitcoin may do that, okay? But this is where there are notable points of interest in the chart that the market maker is going to be able to realize a return. Just look at this green vector candle and they just brought price straight back down towards it. Happy days. Okay? Now, I hope you've enjoyed the video, guys. All right? I didn't want to leave you guys just on, waiting for tomorrow. But I just hope that You all understand what's trying to be established here, all right? We can't know where price is going to go next. There's no such thing. If anyone is going to tell you that price is going to go here, here, and here, then okay, you're going to want to take him with a pinch of salt. But when I say that the chances of price going back to this point, and this point, well, when I say chances, I am collating series of confluences that would work in my favor, which will lead me to make a conviction that price may come back down to these points. It's all probable. I could be completely wrong, and Bitcoin from this point on the 50 EMA could shoot up to take out this next pool of liquidity. And you know what? It's good to be able to have both sides of the coin. Why? Because then you're not surprised by anything. All right? If this move to the upside on the 4-hour time frame, okay, or let me just drop down to the 1 hour. If this move to the upside as a W formation down here is a cyclical pattern, rise up level 1, rise up level 2, rise up level 3, peak formation, price drops down. If this is one cycle, then we are going to be expecting another cycle either to the downside. If it is to the downside, these are the pools of liquidity that we will be sitting, okay? If it's the continuation from the 200 EMA to the upside, well, guys, there's only one thing for you to do. Make your decision. Pay to play. Because we can spend as much time as we want looking at confluences, trying to find out who's talking about Bitcoin, what new information is going to come out about it. But until you place the trade, none of what you have just done has been solidified or you're able to get any feedback from it. You only know how well your trade goes if you're still in it and it's profitable, or you're still in it and you're about to close a profit, or you're still in it and you're losing, or you've had the trade, you've closed it and you've taken a loss. Those 4 scenarios are all psychological. They are all influenced by the way someone feels and thinks about the trade that they've placed. All right? You can't know what's going to happen next, my friends. Which is why I welcome you to the hardest, easiest way to make money. Have a wonderful evening, guys. Mad love. Peace.